Hey, welcome back to Living in Minnesota. My name is Joe Carmack, and it's time for your Twin Cities real estate market update. Now, before we get into all the really good stuff, I did want to let you know I have just opened my calendar for consults into 2025. So if you're thinking about making a move, whether you're relocating to Twin Cities or you already live here locally, find those links in the description down below, and you can jump on my calendar. All right, let's get into it. We're going to talk a lot about predictions, where we have gone, what the year's kind of wrapping up looking like, and then what we're projecting for interest rates, sale prices, everything else as we go into 2025. So with that in mind, let's start you with the days on market. For October, November, we jumped up pretty significantly. We're at 29 days on market. However, that's actually pretty normal. We're seeing our days on market not go as high during the winter months, and we're not seeing them go as low during the summer months. So what does that mean if you're actually buying or selling? Well, it means that generally homes aren't selling as fast. It's not as crazy competitive during the summers, and it's also not really dying off in the winters as much. So with our numbers, that kind of followed this trend. Now with those peaks, we are going to see this number keep going up for our December, January, and possibly February numbers. So we're not to, the peak of where that will get to. Oops, if I can get my little pen to work here. We're not to the peak of where this will go. I'm sure over the next few months we'll do a little bit more, and then we'll drop down as we get into spring. So Twin Cities spring really starts about January 1st. Part of why I give you my consult calendar now is because the phone starts ringing right after we hit the first of the year. Things start booking up, people start moving, so then we'll see those numbers dropping back down. Now, these are the month-to-month changes. Let's look at the rolling monthly average and zoom out a little bit. Now, this is good for kind of more of a macro lens, where are we going, versus the previous slide was really like a day-to-day change of exactly what it feels like at that moment. So here's where we're looking at sort of that bigger picture. We've been trending out of the really craziness of COVID, this 2020 type of time frame. That was the craziness that, if you've heard of, it's gone. We've moved past that now. And a lot of the theme that I'm seeing, which I'm going to kind of keep painting this picture for you, is that we're coming into a market that I think is going to be quite like 2019. And I said this a few months ago, but then this month, looking at our data again, we're really kind of reaffirming that idea that we're out of the effects of COVID now. We're getting back to what things were beforehand. And with that and some other things I've heard in the market from kind of the big names, I suspect we're going to have a year a lot like 2019. So keep that in mind, because I'm going to reference back to that for a little bit. In any case, right now, the rolling 12-month average for the Twin Cities is looking at 22 days on market. So overall, homes are still selling fairly quickly. If they're priced well, they're selling within the first couple of weeks. If they're not, they're taking a little while on the market. And then that's when you can potentially get a better deal. So that's pretty important. Homes for sale isn't really significant. There's no big major changes that you need to know about this month. We're continuing that trend of seeing more homes come on the market. And a little buzzword that you've probably seen in news or social media or whatever is the inventory is going up. The number of homes for sale is spiking. That is true. However, in a few slides from now, I'm going to show you the month supply of inventory. Month supply gives us the relationship of how many buyers and how many sellers. When people are referencing the inventory going up, they're only talking about the one side of the market, which would be the sellers, the number of homes that are on the market. And that's a good thing to see. Obviously, we want that homes for sale to continue going up because we want more options for buyers. And when it was extremely low, that was just because there was one house for every 10 buyers. You need to keep, filtering those types of things you'll hear through the lens of, cool, that's great, more houses are on the market, but if there's 10 homes for sale and there's 30 buyers, then it doesn't really matter. If there's 10 homes for sale but there's one buyer, that's going to really matter, and it's that relationship. So in any case, as you can see, there's no huge changes with homes going up, and I'll just keep pointing out, probably on most of these slides, you can see last month we didn't see a lot of increase like we had the previous few months, so it's sort of tapered off. Kind of interesting. That could be sort of this type of thing here. And I do think with a lot of other data points, to just summarize you and give you the short version sort of, I do anticipate this might be kind of what we look like for 2025, right? Looking like 2019. Maybe going up a little bit, but probably not going up a lot. I don't see any reason why we would all of a sudden spike more. I don't think we can really continue this trend so much. And so I don't anticipate that happening. And if it's possible that this curve here does parallel this, which a lot of things are suggesting it may, then it is very possible this is how we'll look for next year. So now for that month supply of inventory. Now, we're going to talk about seasonality, and then we're going to talk about the sort of big picture macro lens. So in case you're new to the channel, a couple things you need to know with this graph. The lower we are, the more of a seller's market we're in. The higher, the more of a buyer's market we're in. But if you recall, there is one weird little caveat. I've never been able to figure out how or why they collect their data this way. but it's actually the opposite on this graph. So right here, as you can see, kind of going into the winter months, this says it becomes more seller favored. That's definitely not the case at all. So I think how they record this, is it when it was listed, the home's listed, or is it when it sells? Because those are completely different markets, and I suspect it's the inverse. So you have to kind of ignore that, take it with a grain of salt. But in any case, the point is we expect this to go down. It did go down. It went down fairly significantly for October and November. But one thing that I'm keeping my eye on, I'm going to reference back here in a second for you, but this peak going up and this one coming down, they're roughly parallel. However, it seems like that gap is closing. And so I'm curious to see if we don't not keep going down in December and January like we traditionally would. Ordinarily, we'd see this number keep going down and then it would come back up, right? But with us having gone down so much for October and November, I suspect we may bottom out a little bit early and then come back up, not seeing that go down. So what does that mean for you, especially if we're looking at this thing kind of invert to the normal graphs? Really, I think that's going to mean it's staying a little bit more competitive during the winter months, and the spring will not be as significantly, dramatically explosive growth, but that we're already there. Like we're just not cooling off as much as normal. And then spring will still stay competitive like it always is, but perhaps just the delta between the two won't be as different. So that's kind of what I'm expecting. That's what I'm anticipating. This is the zoomed out macro lens. This is that rolling 12-month average versus the month-to-month you just saw. A little bit curious on this one. So with November's numbers, we stayed at 2.3 month supply of inventory on the rolling average. That was the fourth month that we've actually been at 2.3. So we haven't had that all the way since back to this little bottom out here in 2022. So it's curious. I don't know that there's anything too significant to make of it, but it does support my high hypothesis, if you will, that we're getting back to kind of a 2019 type of market. One sort of talking head that I was listening to was saying that they expect kind of that we just stay flat, that not a lot changes. Prices don't change dramatically. Rates don't change dramatically. Homes and buyers and everything. They suspect we may stay fairly even keel for next year. So that, again, supporting the 2019 theory. And I wouldn't be surprised if we do see our numbers staying a little bit more flat, probably coming up a little bit more into next year. But I don't think it's going to keep coming up this significantly like we have seen. So now that we kind of have a framework set, let's talk about sale prices. And this is what everybody wants to know. They want to know what sale prices are doing. They want to know what interest rates are doing. So we're going to hit both of those. Let's start you with sale prices. Now, prices have come down. We're at $375 for the year so far. What you're looking at with this bounce is the month-to-month changes. And the point of this is we'd like to look at seasonality, and we want to see what the market's doing. How fast are prices going up in the summer and how quickly are they coming down in the winter? So again, back to social media, you're listening to the news. When people say prices tanked by 2% last month, yeah, but it's normal. In the Twin Cities, it's normal. I don't know or really care what's going on nationally too much. But if you hear that locally, you got to understand, yep, that's exactly right. I follow Joe. We know what's going on. So don't be surprised by that. We did come down. I think at our peak, we were at like 378 and some change. And then we've come down since then. So if I zoom that out for you a little bit, this is what the rolling average looks like. This is really what you care if you're looking at how's my house performing as an asset? Am I growing in equity? Are things coming down? Last year, we basically sat flat thanks to those higher interest rates. This year, we've actually kept going up. And we did go up in October and November, maybe even a little bit more than we would expect just for this time of year. And it is averaging with the slow time of last year. However, it did pick up a little bit after rates dropped. If you recall, I want to say it was October, November last year. Rates did start to come down at that point. That got people into the market. So that helps that 12-month average to jump up a little bit more than we have the earlier parts of this year. If I give you those exact numbers, this is what we're looking at. And I know somebody's going to bust my chops because this number is different than what I showed you previously. I don't have the slightest idea why. I triple-checked them. For some reason, the Board of Realtors updates their numbers. Something changed, so it was like 9.6, I think. But the first half of 2024, they're now showing was up 10.7%. That would be from January to the peak, whatever that month is. This month, I believe, or this year, I believe, is July. So if we take July's number divided by January, up 10.7. And then we're looking at from that peak, July, to where we are currently, and it has since come down 3.8. So now that you can't necessarily just average that from January to now. I think this is 6.9 was the difference. However, from actual January to now, we're currently up 6.5%. So at first glance, you're like, well, 6.5 is a pretty significant number. Historic average should be around 4. We're well above that. The reason, though, is because we haven't seen those lower drops come in yet. And so once we get from a true January to January, which will be next month, that's actually my favorite market update because I recap the whole year for you and do a whole roundup of what happened. We'll see that drop number going down a bunch more. Obviously, the first half number isn't going to go up. And so I suspect we're going to be closer to 5% or something. 4s to 5s would be my guess that we end up at, which we're currently at 6.5. So don't be alarmed with that, but it is a good idea to keep in mind, okay, if I buy a house right now in January, let's say, and the home is $400,000 now, if homes go up, say, 5% to April, May, June, then we're going to be up, say, $20,000 on that same house. Last thing on prices before we get into the projections, I wanted to show you this graph again. Now, this is that month-to-month change, but this is zoomed out really far so we can see all the way back to 2005. And what I found was interesting about this one, if you look back in here, let's say, and if we draw a line kind of around those peaks of where the hot summer months went to for sale prices, and then if we draw a line to where the valleys came to, you can see it's about so wide, right? But around this time, thanks to COVID, we started to do this number, which was crazy. And you can see that spread really got dramatically wider. Now, that's seasonality. So that would be the summer months being crazy hot, going up 20% in that first half of the year, and then coming down 20% or coming down, 10, 15%, whatever. So it wasn't just that prices were going up, but that market was super volatile. No one really knew what to expect. I mean, your payments at one point were $3,000, and then the next point they were $3,500, and you're like, what in the world happened? It was just this swing. And so in the winter, your house was worth this much, and then it was worth this much in the summer. In the winter, you were going to buy a house for $400,000. That same house all of a sudden was going to cost you $460,000. And you're thinking, good grief, what's going on? What I am starting to notice, which I'm loving to see, is that as you'll see here, this trend is starting to go back the other direction. And we can see it in that the sale prices didn't jump up as high during the summer months, which is great. But we are also seeing them not going as low during the winter months. Now, like I had mentioned before, we are expecting that this number will go down a little bit more. We haven't bottomed out, so we need to get our lower numbers there. So it's not super dramatically, but it's that we're seeing just that the market is a lot more even keel. And fortunately, you're able to expect a little bit more of what's coming up in the market, and things are less volatile. So I just thought that was really interesting. I thought it was worth pointing out. And hopefully, okay, let me clear this off for you. Hopefully if we're getting back to like a 2019 type of market, which I'm hypothesizing, that's kind of what I'm expecting for sale prices. As we go into here, it's still going to be going up. It's still going to be increasing. There'll still be seasonality, obviously. But I'm just hoping that we don't see as big of a swing between the months in summer and winter. Okay, last things and most important things probably that you want to see. This is a little Easter egg for those that stuck around to the end. So Keeping Current Matters put out home price projections for next year. They surveyed 90 different companies, and this is what they came in at. So mainly if you want to just pay attention to this blue line up at the top here, 3.1% is what they're projecting for home price increases for next year. So if you're looking at a $400,000 house, $12,000 is how much more that home should be worth, from this January to next January, let's say. So I thought that was a really encouraging number. A couple of my own thoughts on that one. This is a national average that they're giving you here. Certain markets are going down significantly, like a lot of California from what I hear. Sale prices are dropping pretty dramatically. And I don't think there's a lot that are really booming. I want to say like Dallas, Texas kind of area. Certain spots are certainly booming and really going up like in the double digits. However, overall, we're seeing more downs than ups. And in the Midwest, we're really pretty even keel. So if this is the national average, this would have me think we're going to be 3, 4, maybe 5% sale price increases because we don't get affected by those. So if this is absorbing more negative price changes than average, then if we subtract those out, I think 4 to 5% is a pretty good ballpark for what home prices are going to do here locally. And of course, that's going to be in large part dependent on what our interest rates do. If my mouse wants to work, there we go. This is what they're projecting for mortgage interest rates. There's 3 different sources there. On the top rows there is kind of where we're at starting here now. Oops, if I could draw, that would help. This is where we're starting at now, and this is by the end of next year. And then this is kind of where they're averaging the 3 of them. My mouse does not want to work. Here we go. So of those 3 sources, by the end of next year, they're projecting about 6.33. So where are we at currently? I just pulled up numbers, and the MBA, I think, was about 4.65 or so. 4.75. So they're coming down. Most of these were about 0.3% improvement, maybe 0.5%, which is pretty significant. So next month when I do the whole market wrap up, I'll probably do what that actually affects on your payment and how that changes. But that's a really significant savings, seeing those numbers come down. That said, you don't see any 3% or 4% or even 5% anywhere on this graph. So I do think the market's going to have to adjust their expectations of, I'm just waiting until interest rates drop. They're not too significantly, 0.3 to 0.5% maybe. So, you know, as a home buyer or seller, you'll have to weigh the decisions of, okay, well, if my sale prices go up 4%, but if they come down on rates for me to buy it, you know, 0.3 or 0.5%, in some ways those things will wash. But anyways, things are trending in the right direction, and we really like to see that. So that's what's going on around the Twin Cities. My name is Joe Carmack. You can find all my information in the description down below. Make sure to subscribe so you see that wrap up next month, and I'll see you then.